Thanks for listening to the Adulting is Easy podcast. This is Lauren, and I manage the Adulting is Easy blog and podcast, which can be found at realadultingiseasy.com. Please take a second, hit the follow button wherever you're listening, if you can safely do so. I'm joined today by Andy, who is your friend Andy on Twitter. Andy went from nearly six figures in debt to becoming a millionaire in only 8 years, and much of that boost came from his investments and involvement in the crypto space. Andy, who lives in Austin, Texas, is a YouTuber whose goal is to correct the lies we've been told about wealth. His YouTube channel has over 9,000 subscribers and is currently making over $10,000 each month. Can I say that? Am I allowed to say it's making $10,000 every month?
It has for 1 month.
Well, I'm going to put that out there that that's the limit from here. Thanks for joining me.
Thank you very much for having me.
So our goal for today, Andy, is to make adulting a bit easier for listeners by discussing a personal finance topic, since managing money is a big part of adulting. So today we're crossing into a world barely known to me, and that is the world of crypto. I'm so excited to learn more about it, and I'm sure listeners are too. So will you kick us off maybe by telling us what crypto is and explain it to me like I'm 12?
Yeah, sure. So, crypto is short for cryptocurrency, which in its simplest and easiest to understand form is it's just a digital version of currency. And it is more so a decentralized version of a digital currency because, as we all know, most of the currency we currently interact with day to day is already digital. Your bank account, those are just numbers on the screen by computers in the background and all that good stuff. So crypto is kind of a spinoff. It's kind of a spinoff of the cypherpunk kind of a cryptographic movement where these new emergent currencies have started to gain momentum. The biggest, and of course, in market cap and popularity is Bitcoin. But they all serve different purposes. So these can be anything from a currency replacement, a gold replacement, some other type of financial instrument or way to move money through the financial systems, or even utilities, or in the case of some of the new things out there, art and ownership. There's kind of unlimited ways you can digitize things. Currency is just one of the easiest and most kind of no-brainer right off the bat. So that's what most people know cryptocurrency as, but the opportunities and the kind of options are unlimited.
So when did you first hear about crypto and get into it?
So I first heard about Bitcoin in, 2012 or 2013. I was big into building computers and technology and stuff like that. So I was on a bunch of different message boards and forums online. And I remember having people I was connected with who use their computers to make these digital coins. And they told me they could, get 15 or 20 of these coins a day and sell them for like $8 a day, and it was making money with their computers. And I thought it sounded like crazy talk, and you can't make money out of thin air, so this is dumb. Well, missed that boat, and then it kind of came back again when Bitcoin hit $1,000 for the first time in 2014, I think. And I bought a little bit then, and I started to kind of explore this whole mining thing, but still I didn't really jump in until 2017 when it just was pandemonium. Full FOMO, full all in, just jumping into it, trying to figure out, making tons of mistakes. But ever since then, I've been on kind of a learning quest to understand it as best I can and take advantage as best I can. And so from 2017 until now, I've been heavily investing in. So just basically the past 4 years, it's been all in on crypto learning and investing and stuff, and just kind of wrap my head around it and try to see how it fits into my overall financial strategy.
So when you bought Bitcoin, when you bought it in 2017, did you understand it and the underlying technology and blockchain and mining and everything that goes along with it?
Oh, absolutely not. I was just purely buying because I thought it was going to make me rich overnight. I didn't know.
It makes me feel a little better.
Yeah. So, it's one of those things that I really think the longer you're, in the mix of it, even if you buy for the wrong reasons, if you then commit some time to like understanding it and being invested for the right reasons, that it all works out. But yeah, definitely at first had no clue. I just knew it was digital cryptocurrency, digital dollars or whatever, and that everybody was talking about it, and a million other what are called altcoins or alternative coins that are not Bitcoin. I think it's probably a little bit of a older term that we maybe need to get rid of because there's so many coins and projects. But yeah, a bunch of other stuff that was all popping at the same time.
Yeah, and just for listeners, if anybody doesn't know, Bitcoin kind of really popped in 2017. It hovered, I don't know, maybe around $1,000 or something before that, but it really popped all the way up to 19 something, I want to say, in 2017. And everybody thought that was an insanely high price, right? And it dropped off right after that. But now I would take a Bitcoin for 20 grand, I'll tell you that.
Yeah. Yeah, so yeah, 27. I mean, it depends on which exchange you're looking at, but it's somewhere between $19,000 and $20,000. And there was two camps, a whole bunch of people in the camp of, oh my gosh, this is crazy high. What
Yeah.
everything's going to crash from here, and then a whole bunch of people who are like, it's going to 100,000. So two camps. We all know what happened next, though. It definitely did crash back down and had a 3.5 year kind of bear market,
Yep. Now it's back.
and now it's back.
So you mentioned when you were saying what the definition of cryptocurrency is that it's decentralized. Can you explain that? A good bit of our listeners are like college age, so they may not even really understand that our money is like centralized and controlled.
Yeah, so I mean, I can explain Bitcoin in a very simplistic way. So basically, using the bank example, when you have your money in a checking account, the bank has a ledger or a database, or if you want to really dumb it down, like a spreadsheet that says your name, your account number, and the amount you have in your checking account. And they are the sole guardians of that information. It is centralized within that financial company, that bank. So every time you take money out, they have software that deducts it from that ledger and adds it to that ledger and keep a constant record of how much you have in your account. Bitcoin, it does the same thing, except that ledger isn't stored in one location. That ledger, that spreadsheet, that database is spread out across the world. There are tens of thousands or hundreds of thousands of computers out there that store this ledger, and they all check with each other to verify its authenticity and that it is factually correct and unchanged. And all that good stuff. So the difference is the money is fundamentally different in the strictest sense that your money at the bank is in one spot, controlled by one set of people, and Bitcoin is spread out across the globe, and it's all checks and balances between all these machines across the world.
Yep, perfect. Great explanation. So Bitcoin is truly meant to replace currency. Is that right?
So this is where there's debate with all of this. Bitcoin originally in the white paper by the anonymous creator, or the name of the anonymous creators group, individual or people, a group of people, who knows, Satoshi Nakamoto. This Bitcoin white paper is originally called a peer-to-peer digital currency, basically a dollar replacement. However, Bitcoin is kind of whatever you want it to be, and a lot of the mindset has shifted, and more so seeing it as an asset class, maybe a gold replacement, maybe something that is destined to be a worldwide reserve asset, something like that, and that the currency portion of it, the going and buying your coffee at Starbucks with it, that will be done on another layer on top of Bitcoin. And this is where it all gets a little bit confusing and crazy, building software on top of it that satisfies those requirements, because the base layer, the base code of Bitcoin really isn't fully equipped to be a day-to-day usable dollar replacement.
Because the way that these computers that are all across the world, the way that they are verifying these transactions is cumbersome and actually not very efficient. And that's by design, right? Because if it was super easy to just create more and more of this Bitcoin, there would be no value in having it because it would just get really inflated over time, right? So So I was reading that it might be maybe for big transactions or only certain amounts of transactions, right? You would do all these during the day and then maybe clear them at the end of the day using the Bitcoin, the Bitcoin network, right?
Yeah, so that would be using Bitcoin for the settlement of accounts for all these companies and stuff. And I really see that as a great use case for it. I see Bitcoin being used in a lot of places that gold is used, or that gold would be great to be used in that use case, but it's too cumbersome itself, physical gold to move around and deal with and stuff. I see a lot of opportunities like that where it is an asset class that can be used for various reserve or settlement functions globally. But yeah, it is by design. I mean, one of the fundamental things about Bitcoin and why it is kind of a first of its kind, and why it has been so successful, is it essentially solved what is called a double spend problem, which is where, if you have if you have, coins on your computer, what's to stop you from saying, going in there and typing in the configuration, oh, I've got twice as many or 10,000 as many, and just changing how many you have. They're not unique. That's just digital numbers on a screen you can change. But Bitcoin, by spreading out its code throughout the entire globe and having all these machines check against each other, it solves that problem by making each Bitcoin truly unique, and where you can't actually change the amount of total Bitcoins available, how many you have, how many you're sending. You can't spam or confuse the system. So it's really wonderful for those things. Whereas previously, in the 90s, there was attempts to make digital currencies, but they were all very centralized, like single companies who put them out, and they couldn't quite solve those problems, amongst other issues. I mean, the decentralized nature of Bitcoin is one of its big advantages, but that is a kind of a core fundamental feature of Bitcoin that gives it a lot of its value, but also the fact that it is there's so few of them. Only 21 million can ever exist, of which there's a little over 18 million currently in circulation, and there can never be more than that. And in order for there to be more than that, you'd have to change the code, and you will never get all the machines on the globe to universally allow that to happen. So it's kind of a baked in fundamental set.
Right. Perfect. So that's if it does become sort of this reserve asset, or even if it's a gold replacement, that will keep it from the value from ever becoming diluted, right? Because there's a certain limit to how many there can possibly be.
Yeah, plus becoming any of those things means it's kind of eating away at other things that currently function for that.
Mm-hmm.
So, like if it starts taking over many of the functions that gold has, for example, well, then it will start eating away at gold's global market cap, which, right now Bitcoin is right around $1 trillion market cap. Well, gold's global one is somewhere around 11 or 12 trillion. So if it were to fully replace gold worldwide, well, then Bitcoin's price will be in a 10 to 12x from where it currently is. Just for
Mm-hmm.
that one aspect. There's a bunch of other ways it can be used, and other places where it can kind of take over.
Yeah, that's a really good way of looking at it. So we've talked about Bitcoin, and that's obviously, I guess it was the first cryptocurrency as we know them. It's also certainly not the only one. How do these altcoins differ from Bitcoin?
Well, some of them don't at all. Some of them are literally copies of the Bitcoin code and just change the name and change a few functions of it, and they launch them. Some of them are completely different, like Ethereum, for example, is pretty different from Bitcoin. Essentially, they all have different goals and different functions and different use cases. One of the biggest differences, though, is Bitcoin. No one knows who the founder is or how who started it and stuff like that. Whereas almost universally, all the other coins, they have teams, and if they might have anonymous teams, but people know who those people are behind the scenes. It's kind of one of those things where when the genie is out of the bottle, you can't quite put it back in and repeat the what happened with Bitcoin, but essentially the easiest way to explain it is that they all have different functions. Some coins want to solve like a supply of goods and stuff, and like shipments and tracking across the world, so they want to use decentralized ledgers to track all that stuff, and products moving from stores to warehouses and stuff like that. Other ones want to replace the dollar directly. Other ones want to build in smart contracts, which are ways to program the currency to have specialized functions where you can have two people having agreements between each other that are based on certain circumstances, which is a really dumbed down way to explain smart contracts. They can, kind of unlimited possibilities with smart contracts. Some of them are just jokes. They're just they're just because someone thought they could do it and wanted to see what happened. Dogecoin is a great example of that. There's no meaningful use to it other than it was a joke and now it's caught on and stuff like that. But yeah, there's a million different use cases for all these different currencies and they all have different purposes. And I would say, in my opinion, 90 to 95% of all the currencies that have been created, cryptocurrencies, will cease to exist or go to zero or something in the next couple decades.
Okay. So which ones do you think will not go to zero?
Well, Bitcoin, I think Ethereum is another great example of some really cool technology and stuff. I'm not as convinced about anything beyond Bitcoin. Honestly, it's Bitcoin is 80% of my crypto portfolio because I believe the most strongly in it. But there are several. Ethereum, like I said, Cardano. I have a bunch of small ones that I don't really want to mention in case they were to go to zero or something. It's very risky. Some little ones, but honestly, I don't really know. I think there's some with very promising technology that could work if everything kind of works perfectly. But I think some of them are overly complicated, which is one of the reasons I love Bitcoin. Is it's simplistic compared to a lot of the newer cryptocurrencies out there, and I kind of think the genius is in some of the simplicity.
Gotcha. Yeah, it does seem now that I've read a little bit more about it, it does seem like it's pretty straightforward in the sense of what is it doing, right? I didn't know what Bitcoin mining was. I was like, okay, yeah, that's how you create Bitcoins. I didn't exactly understand that that's how you are validating all of these different transactions and how many Bitcoins each person has, and that's actually basically taking the place of this third party intermediary, right? I didn't understand all of that until I started reading a little more about it. But that sounds like, oh, okay, I can grasp that. It's not as complicated as I thought it was going to be.
Yeah, and so there's two aspects of that. There's the Bitcoin miners, and then there's the Bitcoin node operators.
Mm-hmm.
So a node is just someone who in their house has a small computer that is running the Bitcoin code basically and storing the ledger, a copy of the ledger. Every single transaction that's ever happened on Bitcoin from the start in 2009. So between those two, they kind of are the checks and balances of the system. There are tens of thousands or hundreds of thousands of nodes spread across the world, and they have a very small. The kind of barrier to entry to running a node is tiny. You just need a small computer. Like I have one that's running on a Raspberry Pi, which is a teeny little computing device. Maybe cost me $150 for the whole thing, and it just sits in a closet, humming away with the code, checking against all the other ones across the planet. And then there's the miners, which are actually running the compute power to do the mathematics, to crunch the numbers, to add blocks to the blockchain, and actually move the Bitcoin chain forward. So recording the new transactions on it, adding the sending the transactions from person to person, all that kind of heavy lifting is done by all these incredibly powerful computers, maybe one of the most powerful supercomputers on the entire planet, spread it across the world.
Amazing. Can you imagine being Satoshi Nakamoto and coming up with all that?
No, I cannot. Yeah, it's kind of not just the genius of the idea and the execution and the code, but also just the timing of it, I guess, and the serendipity of having early adopters and getting it off the ground. Yeah, a whole bunch of factors there.
Right. And the fact that it's lasted this long from 2009 to now we're sitting in 2021 says a lot about it in and of itself, right?
Oh yeah, I mean, people are quick to dismiss cryptocurrency, especially Bitcoin, but at this point, you kind of have to say, well, it's been around for 12 years. Maybe there's something to this. There are other things that haven't lasted nearly as long. Companies, stocks, and stuff that everyone was hyped about that aren't even around anymore. And Bitcoin is still here, and I don't think there's any signs that it's going anywhere anytime soon.
Mm-hmm. So you've talked, that was a really good explanation of the nodes and the mining machines. What are your thoughts on the environmental impact of this mining?
Yeah, so the downside to the miners is they are very powerful computers with very hungry power requirements. So obviously, very powerful compute chips require a lot of power, and there's lots and lots of miners around the world because it is a very capitalistic system where people are incentivized to run miners because they get rewards, they get paid in Bitcoin, and as Bitcoin goes up, it makes it even more tempting to run these machines and make your own slice of the pie profit. So there's lots of these machines pulling lots of power across the globe. And for some people, that is a problem. There's lots of news articles where they say it uses as much power as, and then fill in the blank, whatever country it uses more power than Ireland or something. And people say this is terrible for the environment and we need to stop this. And there's other cryptocurrencies like Ethereum, which currently have the same system, which is called proof of work, where they have these mining machines who basically make the blockchain go forward and make new coins and all that good stuff. But they are transitioning to a new system called proof of stake, where you don't have the mining machines anymore. It's much lower energy output, all that stuff. But these arguments all come down to the idea that energy usage equals bad, and I think the whole discussion is much more nuanced than that. I think you have to ask yourself, is it a worthwhile expenditure of energy? And from my viewpoint, I think it's very worth spending the energy and to continue spending it. I think it's a revolutionary asset class. I think it's a revolutionary idea, and I think that because of what I think how it can affect and change the world, the global economies, I think it's worth spending the energy to do so. But also, if you put it in context, the global financial system as it stands uses, I don't know, 50, 100, 200 times as much power as Bitcoin. The current financial systems all around the globe, everything from the data centers to the banks themselves, running the lights, and people driving to and from their jobs at the banks, and all the power that goes into modern banking and modern economies is many scales higher usage than Bitcoin. And I think most of that system is due for a change or due for an upgrade, or maybe its time in the sun is over. And so I welcome the expenditure of the energy required to make Bitcoin work. And I also really think that that is something that makes Bitcoin as powerful and as secure as it is. I think most of the other methods for securing a decentralized currency aren't as strong or secure or as unhackable as Bitcoin's is. So it just seems to me that it's very worth it. And then the last thing I always say about this is, if you actually look at the energy usage of Bitcoin, now it has changed a lot since most of Bitcoin miners have moved out of China. For the past several years, 60 to 70% of the energy going into Bitcoin has been renewables. Bitcoin mining is, again, very capitalistic, and people want two things. They want those profits, and they want the profit margins to be as high as possible. So that means seeking out the cheapest electricity sources possible, which in a lot of places has been hydro. It is occasionally wind and other things. Geothermal is a big one coming online in some places that can be extremely inexpensive. But essentially, they just go wherever the cheapest power is. And a lot of places around the world, here in the U.S. and like Washington and stuff, it is hydro.
And right, so we have this idea that everybody is using all this power from like coal power plants.
Right. Yep. The news articles like to just equate Bitcoin energy as bad, and it's we're burning coal and ruining the planet to do it. But I don't think that's really very accurate. And I think context and understanding of what we're trading the power usage for is something people should consider.
Yeah, you make a really, really good point there with that people, obviously, they're going to be seeking out the cheaper energy. I hadn't really thought about that. So I know you said that of your crypto portfolio, Bitcoin is 80%. How much crypto do you think people should invest in?
Well, I mean, that's different for everybody. I think it you should invest as much as your understanding of it allows. It's very popular for a lot of people to say you should invest only as much as you are willing to lose. And I think that is maybe old or bad advice at this point. That maybe made more sense several years back when it seemed not as likely that Bitcoin is going to be around into the future. But the farther along we plod through the history of Bitcoin, the more likely it seems it's going to continue to be here. So I think that advice is not great advice because you don't say, most people don't say that very often about stocks and things unless they're really risky, like penny stocks and stuff like that. So I think you should invest as much as your understanding and your conviction kind of guide you to do. I have quite a bit of understanding of all this. I mean, I still am not an expert. There's people who are much smarter than me who have a much greater grasp of all this. But I have a greater understanding of it than a lot of people. And I've had several years of just continuing to learn about it and experience it, invest in it. And that's my conviction has grown extremely. So I'm very comfortable with a very large percentage of our net worth being in crypto, specifically Bitcoin. But if you're a new person who's just, heard about it, or maybe you've listened to one podcast, or you've read one book, or you've watched a YouTube video and you're interested, but you don't really know very much about it, then maybe you should start small and just dip your toes in the water and don't worry about FOMO or timing it, and just increase it as you feel, as you see fit, as you understand it. And maybe you think, oh, I can see the use case of this going forward. I understand how it's going to take over some of these markets. I understand what these valuations in the future might look like, all that type of stuff. Don't just do something because other people are doing it. But, as a universal, I tell a lot of people, it's kind of crazy to not have at least 1 to 5% of your portfolio in Bitcoin. It's such an asymmetric bet. It's such kind of a no-brainer. It's like,
Right.
if you take 1% of your existing portfolio and you put it in Bitcoin, and let's say by some miracle Bitcoin goes to zero, well, you lose 1% of your portfolio's worth. You still have 99% of it, and that's kind of not really that big of a deal in the big grand scheme of things. But if it does eat away gold's market cap and it has a 10x from here, well, that's probably that 1% position is probably going to outperform most of the rest of your portfolio. It's such a big upside with almost no downside.
Right. So instead of the most, you should invest being as much as you're willing to lose. Maybe that should be the least you should invest.
Yeah, sure.
I like that. What else do you have? Do you have stocks? Do you have real estate? What does the rest of your portfolio look like?
So our net worth, about 40 to 45% of it is the crypto portfolio, which is much bigger than a lot of people's, but I'm very comfortable with that. And that, of course, depends on the day and what Bitcoin's price is doing.
Yeah. Mm-hmm.
It goes up and down. But the rest is a mix of just some dead simple index funds and some great company stocks in various accounts. And we don't have much in the way of real estate beyond our primary residence, but we live in a high growth area in a nice location, so that has appreciated considerably here in Austin the past few years. But that's something we want to expand on. We want to add some real estate going forward. But yeah, it's a pretty simplistic overall net worth kind of picture. But yeah, Bitcoin and crypto is certainly one of the biggest chunks and been the most kind of wild over the past 4 years.
Mm-hmm. What will you speak to the volatility? What should people expect, and how can they get comfortable with it?
Yeah, so volatility is, I see it as a great thing. You need volatility is inherent in any asset or investment that is finding its place in the market. And Bitcoin is currently figuring out where it belongs in the global market. Anyways, but volatility, like dealing with it, I think there's a couple of factors to why it really impacts people. One, if you just don't have a whole lot of understanding of the investment. So the more understanding you get of Bitcoin or whatever you're invested in, the easier that becomes to stomach. Two, just the time in the market. So the longer you are actually invested in holding it, the longer you feel the ups and downs, the easier it becomes. When Bitcoin hits its recent all-time high of almost 64,000 back in May, and then maybe a month later dropped to about $30,000. Honestly, it didn't affect me at all. I wasn't worried. I wasn't panicked. It's just kind of normal stuff. But a lot of people were freaking out because they bought it for the very first time. So that's just something where you just got to give it time and it will make a lot more sense and you'll become more comfortable with it. And the last thing is, if the volatility of it, the ups and downs are really like stressing you out, there's a good chance you probably are over invested, overexposed, and maybe you need to stop dumping money into it and chill out on that a little bit until you get some more understanding and some more time with it. Those are usually the things I hear from people who are struggling with the volatility of it. But also, when it comes to volatility, I really am a firm believer that one day Bitcoin is going to be so big and so mainstream that the volatility is going to be next to zero. It's going to be more like your unrisky and stable index funds and stuff. But that's one day far in the future. So if you want all the upside to get to that place where it's a much, much higher price, well, then you have to deal with the volatility now. It's the price you pay for that reward. If you're not willing to pay the price of volatility, well, then you can just wait, but the upside will be greatly diminished. So it's one of those, you just gotta do a gut check and kind of see where you fall on that spectrum.
That's really, really amazing advice. So if people do want to get into crypto, maybe buy some for the first time, literally, how should they do it?
So there's a bunch of great places you can go online and buy crypto. Most people just go onto Coinbase and try that for the first time. It's one of the easiest. But there are other services that are just as easy with lower fees. A great one for most people who are just starting out is the Cash App, which most people just send cash to each other, money to each other after they split a bill at a restaurant or something. But it has built-in Bitcoin purchasing and selling. And so you just go on there and put a $5 into Bitcoin or $100 or whatever. It's super easy. There's several different ways. It's very low barrier to entry now. You can just hop on Coinbase, make an account, hop into the Cash App, make a quick account, and in probably less than 2 or 3 minutes, you can own some Bitcoin.
That's pretty cool. Good. So not Robinhood.
Yes. So Robinhood is you can do it there, but you're going to be keeping your Bitcoin there until you sell it. Now, for most people, custody, where they keep their Bitcoin, doesn't really matter. They just want to have some. And so that's you, and it's not huge amounts, then maybe that's fine. But if you ever want to move your Bitcoin somewhere else, that is a bad option because they don't let you withdraw it. They only let you buy and sell. Whereas Cash App or Coinbase or some of these other ones, a favorite of mine is river.com. They have really low fees and it's a really easy interface. But all of these let you transfer it. So if you start getting a huge amount and you start getting really geeky about Bitcoin and you buy a Bitcoin wallet, hardware wallet, which is a whole different discussion, you can transfer it to that. Or if you want to send it to a different service, if you want to send it and earn some interest on it, like at BlockFi or Celsius or one of these crypto interest accounts, you can send it from your Cash App over there. You can send it to wherever you want and use it however you want. But Robinhood is one of those services, and there's others like it that don't let you have that ability. And so I don't like it for that reason.
Cool. No, that's excellent advice. So let's see. We covered what is crypto. We talked about the different kinds, the mining, environmental impact of it. We touched on Ethereum, Cardano, even Doge, how much everybody should have. Do you have anything to add before we wrap up?
Well, actually, I actually want to talk one last thing about the mining aspect before we wrap up, and just say that one of my favorite things about Bitcoin or many other cryptocurrencies out there is it's a really cool innovation where you as a just person at your house can interact and participate with these projects and with these networks. Anybody can buy a Bitcoin miner and start earning Bitcoin and all that good stuff. Now that's probably a higher barrier to entry than some of the other ones because they're kind of expensive and stuff like that. But there are small projects where you can just have with your desktop computer or a small device you buy and put in your house that's completely silent. You can buy these things and you can participate in these networks that are global decentralized currency networks and earn a little reward for doing it. And it's just a lot of fun to kind of actually be a part of the system instead of just using it like you would a bank account with and having almost no involvement how it all works. That's one of my favorite things about cryptocurrency is I'm a part of the network. I help the network continue to exist and to operate. And there are other people out there in the world like me. And it's not just some stuffy businessman in a office at whatever the big brick and mortar banks are, who is controlling all of this with all the influence and whatever whim they have. I feel like it's actually making some difference to kind of be a part of the whole process.
That's a great point. Absolutely love it. Well, maybe we should also say, you can hear it in your voice that you are passionate about crypto and especially Bitcoin. And just like what you were talking about just then, how should people learn more about it?
Oh man, there's a million great YouTube channels. I talk about crypto on my YouTube channel. There are so many. If you just type in whatever, if you type in Bitcoin and anything about it into YouTube, you're going to find a bunch of great resources. But there's also tons of amazing podcasts and amazing books. Just so many resources out there to learn about all this stuff. However, you learn best, but it is plentiful. That's one of the beautiful things of this whole space being around for over a decade is the adoption and the spread of the information is at all time highs. So you can go anywhere and find all this great stuff and just for hours on end fill your brain with crypto facts and understanding, and you might get sucked down the rabbit hole. It's all good stuff.
Yeah, there's a lot to learn, and it is really fun to learn about. It's also a great potential investment, right? We talk a lot on this podcast about real estate. We've talked some about stocks and index funds and having an emergency fund and things like that. But this is definitely something that I don't think I have touched on enough. So it's definitely something that everybody should at least have a baseline understanding in, I would say. So, Andy, you mentioned your YouTube channel. Do you want to tell people about that and how they can get in touch with you?
Yeah, so YouTube channel is if you just go to YouTube and type in your friend Andy, you will find me. And on Twitter, you can probably type in the same and find me. But my actual Twitter handle is hi Andy, OHHAI Andy. Your friend Andy was already taken, so that's where I am on Twitter.
Okay, perfect. I'll put those links in the show notes. Everybody probably knows, but I'll say it like I do every time. You can follow me on Twitter at Adulting is Easy. I'm on Facebook at the same name. I'm not doing great at posting on there, but I'm going to get better. You can email me at realadultingiseasy@gmail.com. You can show support at patreon.com/adultingiseasy. Thanks again for listening, everybody. Hopefully, Annie and I have made adulting a little easier for you.